Good morning, everybody. Today is Wednesday, July 22nd, and this is the pre-market analysis for QOL Trading. Starting out here, you're seeing our webpage here. I'm actually going to put a link here in the chat. If you go to our webpage at QOLtrading.com, you put your name and email address in here, and you will be on the list for our weekly newsletter that we put out every Sundays. It's free. And what you get in that newsletter is a pretty descriptive recap of what happened in the week, and then everything what's potentially going to happen in the week to come. I cover broader market levels. I cover the cover all the Mag 7 levels, any kind of news that's pertaining to Tesla, or any kind of geopolitical news that's happening, obviously, with Iran these days, and any kind of economic data that we can expect in the week to come. But anyway, so if you go, getting back to it, put your name and email address on here, and you will be subscribed for our free weekly newsletter that we put out. We've put out 18 editions so far, and the amount of information I'm putting in there continues to grow every week. If you want to learn more about what we offer here, you can go down here and click Learn Our Strategy, and you'll get a free 15-30-minute consultation with me and show you how we mentor traders on learning how to day trade. If you go up here and you hit either the live trading desk or the Discord symbol up here, it will take you to the sign-in page, and you can come and join our Discord channel for free down here below. It doesn't cost you anything. And then it'll bring you to this channel right here. Here's our Discord channel. And here we have a pre-market, post-market channel here where I post the link to give you access to where you are today. Also, if you subscribe to the channel, you'll get notifications on when I'm posting any kind of videos, whether I do the pre-market analysis or if I post any kind of educational videos. Down here also you have a levels channel. So if you want me to cover anything that any kind of levels that I do not cover in the pre-market analysis, drop me a note. You can drop me a note here. You can drop me a note in the chat, comments down below. I'll be glad to cover those levels for you. But I do not cover any penny stocks, that is. And then you can see that here's where you're going to get your access once you sign up. And if you go here and you want to upgrade, and you would get to a live trade desk. We do live trading from 9:30 a.m. to 11 a.m. Eastern time every day, and I go over options trading. I pretty much cover trading Tesla options. That's all I cover. I do answer questions other than just the Tesla options as well. And then on the indicator side, we've created an QOL ORB scalper, which is an indicator. It's an analyzing tool for the market when the market breaks out in the morning. Gives you your opening range breakout. It gives you the range, whether you're going to be using a 1 minute, a 2 minute, a 5 minute, up to the 15-minute range. What we're looking at here is Tesla. The 1 minute is up here in the left-hand corner, the 2 minutes to the right, and the long rectangle box down here is the 5 minute. And so what it does is it plots all these levels for you as the market is moving in the morning, so you don't have to sit around and take your trend lines out and start drawing lines, and this enables you to focus on your trades. In the lower right, in the right corner on all the charts, it will give you your table here. So it gives you the range, the high. So yesterday's high on Tesla was 374.48, and the low was 369.96 on the 1 minute. And then as you can see, if you go up to the 2 minute, the range widens. Below that, it gives you your mid-range, and then it gives you the total range, the total dollar range of that. 1 minute was $4.52. As you can see, you move up higher on the 2 minute, $5.33. And then if you come down here on the 5 minute, you see $5.74. And then obviously, if you go to the 15 minute, that range is going to be more expanded. Below that, it gives you a range quality. So it tells you how, if the range is, it rates it based on average true range along with volume, and it gives you a rating 0 to 100. So obviously, the closer you get to 100, the better that range is. It also gives you a long grade, meaning that if the markets are moving higher, it's rating it for the long side. So right here, you could see yesterday, or actually, this is current right now. So these levels right here stay current, and it's even though it's after trading hours or pre-market. it gave it a B rating, right? And then the short grade, it gives you a C rating. So it's obviously it's favoring more of the long. And then it gives you the trend basis, right? So, or bias. So it gives you the long bias here. On the 1 minute, it's giving you a short bias on the 2 minute currently and a short bias on the 5 minute currently, right? And then it gives you your entries and when you break, and then it'll give you your exit. So it gives you your price targets. On the upside, gives you 2 price targets. The first one right here, you could see yesterday, right in here was the first price target, call it about 379 even. And then it gave you a second price target of 381.26. And you could see with Tesla yesterday, it was a pretty clean break, pretty clean move. Your day pretty much could have been done at 9 o'clock if you were only going for the one price target. And then if you went for the second price target at 9:22. So less than an hour, your day could have been done doing that. So if getting back to your sign-in page, you can get the scalper by itself, or if you want to get a combination bundle package, you can do this indicator along with the trade room as well. All right, so now getting done with the housekeeping there, let's get into the economic data here. For today, Wednesday, we've got Trump is speaking at 2 o'clock. They just added that one in there. You have crude oil inventories at 9:30. They may be watching that a little bit. And then Thursday, tomorrow, I don't see much on here. You get natural gas shortage, treasury currency report. I don't think anything is going to be that earth-shattering there. And then we pretty much have nothing on the dockets for Friday. I mean, you have flash PMI manufacturing at 8:45. It could move a little something, and then new home sales at 9 o'clock. And as far as what we have for today, the big thing for today after the close, you have Tesla earnings, you have Google earnings. And then what else do we have here? We have Intel for tomorrow after the close, and that should be it for moving the market for this week. So getting into it right now, let's start off and let's cover the VIX real quick. VIX is elevated a little bit, but not horrible. We are playing around here with the 20-day moving average at $16.93. For those of you that don't understand the VIX is a volatility index, and the higher it is, that means that the market is moving in a southern direction, and when it's flat down here in this, below, the range actually where it's at right now, it's still very calming. So, we do have some gap ups here from yesterday, so that gap can possibly close. If we lose the 20-day, that'll be good. Maybe we can close this gap here from July 10th down at $15. That would be very good. So as the VIX, it's the complete opposite of the broader market. So if the VIX is low down here, then the broader markets are balanced and people are comfortable with making their trades. Let's get into oil right now. Seems to be the big focus right now. So oil is rejecting this 100-day moving average at $89.48 a barrel. So that's pretty good. You want to stay below this 87.42 a barrel and then possibly pull back down here. You do have the 50-day moving average at $84.74 a barrel. So I'd like to see us pull back down here to the 20-day and the 200-day moving average at $75 a barrel. That would be good. That's good for our pocketbooks locally. That being said, if you do get above this 100-day though, it just points something out here. You do have some gap downs here from May 22nd at $96.99 a barrel. That would not be good for our pocketbooks here. So if you do get a pop here, you probably get a little headwind, little resistance at that 94.87 a barrel. But you could see we are above the 50 days. So, just like any kind of equity, if we are above the moving averages, you're looking for pullback longs, right? So that, for me, I'm reading this as oil could still have some upward push to it. Let's get into the broader markets. We cover the broader markets here. Here's the ES. It's got about 35-40% of technology in it, and then the balance of it fills in with your regular type of equities. So it's less volatile than the NASDAQ, right? So the NASDAQ has more technology involved in their index, and that's why it's going to be a lot more volatile, right? Because tech flies around here. So looking at here on the ES, we are below the 50-day moving average. So just like I just said right now, we're below moving averages, we're below the 20-day as well. You're looking for pop and fade. So in order for to get some more upward movement here, you're going to have to regain these moving averages here. So the 20 is sitting, call it at 20, call it 75, 28, 85 and change. And then the 50 is sitting at 75, 34 and change. So need to get above those in order to push higher. On the downside here, I don't mind this level here of support, 74.9650. If we lose that, that level. That's a June 24th high. If we lose that, we can come down and potentially test that July 8th low at 74.6950. And then below that, we have a 74.2744 level. On the upside, though, if you do push through these moving averages and you can get above this low that was rejected yesterday at 75.32, you could push back in here to this 71.39 level. And then if you do continue to push higher up there, who knows what kind of data will come out to push that. 75.93.76 would be a break and retest of a a weekly high from, when is that? June 29th. So if you do push up there, I would be careful on, getting some headwind for the downside here. You also had this open point of control, 76.0279, which would give you some headwind, right? So that's an open point of control. Market seems to gravitate back to these point of controls. So have those on your charts there. Let's get over into the Qs. The Qs are going to look to be the same thing, except, however, the SPY, pardon me. We are above and holding the 20-day and the 50-day moving average, so that's key for today. If we hold that, then you're looking for a push higher. Probably need to get through this 747.29 level, and then the close from yesterday at 748.28. So if you can't pop through that close there, you probably can push into this low here from July 15th at 750.20. And if you get above that, you could push back up into this gap down from July 10th at 754.91. Through that, we have an open point of control at 757.70. And through that, you go through all-time highs. Downside, if we lose our moving averages, our 20 and our 50 today, could come down, get a little support down here at 743.46. But if we lose that, July 2nd low is giving you some defense down there at 740.05. I like a better pullback long down here at 736.53. A break and retest. For those of you that don't understand that, you break a level, you come back down 736.53. If the market flushes down there, I don't mind that level to get long. Let's get over to the Qs. If you're new to the channel, subscribe to the channel, hit the thumbs up button, like this video. Don't be afraid to share it with people as well. Everything on this channel has been growing organically. I do not pay for any advertising. I started this channel in September, and it's growing at a steady pace. But could always grow better. Also, if there's anything that you want me to cover, again, just leave a comment down below. I'll be glad to cover some different stocks that I'm not covering for you right now. Again, however, I will not cover any penny stocks. We've got this 29,044 level. We're kind of battling here. Got to get above that. And then this low here from June 26th at 29,181.50. If you push above that, you can get into yesterday's close. Yesterday's close sitting at 29,290. And if you get above that, this low here from July 2nd at 29,319, you probably get a little headwind there. But if you can plow through that, we have this open point of control from July 16th at 29,432.52. Above that, we have the 20-day moving average. So you can see right here, the NASDAQ, like I said, we're below the moving averages. So if you're below the moving averages, it's trending down a little bit. Doesn't necessarily mean it's crashing or anything like that. Kind of consolidating a little bit. However, we are below the moving averages here. So you're looking for levels for the market to pop into and then possibly take a fade on the downside. If we lose this 28,912.75 level, I think we pull down here to June lows. That is a significant level. You got to hold that 28,512. If we lose June lows, then we come down here to the 100-day moving average of 27,892.50 is what I have there for levels. So take a snapshot of these levels. They're not really changing. It looks like it's doing a little consolidating right now. So let's get over to the Qs, and then we'll get over to the Mag 7, and then we'll do Tesla and Tesla options, and we will get on with our day. I got to hold this 723 level here. That's a point of control that was filled from June 11th. And so if you lose that level, I think you potentially can come down here to the close from, I think it was Monday's close. Come and test that again, 696.10. And again, if you lose that, here's our June low on the Qs at 686.37, which should give you some support. However, as I said on the NASDAQ, same thing goes for the Qs. Must hold that. And if you lose that, I don't mind this April high at 668.90. It gives you some confluence with the 100-day moving average at 669.08. So a flush down to this level would be pretty good, pretty healthy for the market, so you can turn higher. On the upside, though, if the market does push and you regain the 20 and the 50-day moving average, 20 is sitting at 714.67. If the market pops up there, you probably get some headwind, but if it plows through it, we do have this, I'm going to get rid of this 716.21 level, but we do have the 50-day moving average at 719.25, where you possibly get some resistance. And if you pop up in there, we have the 726.39 high from July 10th that you probably get a little headwind for. So, but it is getting, it's trying to stair step higher right now. So if you can regain yesterday's highs, maybe you can push higher. All right, let's get over into the Mag 7. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button and like this video. We'll start out with NVIDIA right now. NVIDIA is kind of trapped in between the 50-day moving average, sitting up here at 209.76, and below us is the 20-day moving average at 201.69. So you could pop back and forth in between those levels. It's also sitting above this regressional trend line at 202.11 that I have here. So if a pullback down here would not be a bad pullback. If you got to hold this 204.13 level, it held it yesterday. See if it can hold it again. If you lose it, I think you come down and maybe flush to the 20-day moving average. And then if you lose the 20-day moving average, we have this 100-day moving average sitting at 198.89. And just above that, we have a low from June 9th at 199.34. If you lose that 198 level, then 192.58 is probably your next line in the sand there. That's a 200-day moving average. And it's a midline regressional trend line that I have there at 192.14. Let's keep moving. We will go to Apple. Apple's been one of the strongest stocks around right now. Holding that previous all-time high at 323.45. That's your line in the sand. Got to stay above this level here. If you stay above this level, I don't mind the longs. If we see, we're well above the moving averages, right? So the 20-day moving average is 308.48, and the 50 is at 304.24. So being above the moving averages, you're looking for pullback longs. So if the market pulls back, put these levels on your charts. These would be decent levels to hold for support. You could see yesterday morning and we're looking at a 15-minute chart, by the way. So you can see yesterday morning it dipped below the 323.45 a couple times, and then it just regained it, and then it went higher. But not any significant moves right now. As you pan out, you can see the all-time high is 339.20. So just kind of dangling up in this area right here. So you're looking for pullback longs right now. So 317.40 would be a decent level that I would consider for a pullback long. And then if it flushes through that, you've got the 308.48 and the 304.24. The 50 and the 20-day moving averages there. Okay, is Meta. Meta's kind of consolidating also. It's above the 200-day moving average at 639.70. Got to hold that level. It's sitting on this upper regressional trend line that I have drawn since October 29th of last year. Got to hold this level. You can see it's been holding this level nicely, so that's a pretty decent number, 637.37. If you lose that, we have the 100-day moving average at 616.62 and the 20-day at 612.68. We also have this low at 618.70. It's a May 23rd low that it would need to hold there. So we are above this right now, but we are above the moving averages. So pullback longs is what you're looking for. I think if you can get above this high here from what is this, Monday's high here, I think you could push into the 677.86 level. Could consolidate though. It looks like it's been consolidating over the last few days. So I don't see anything too earth-shattering on Meta for today. Google, we have Google earnings after the close today, and expected movement on Google is I was reading 5.4% movement, which is equals to about $18 move one way or the other. So right now we have on the $18. We got down here, it was 347, maybe the 330 area possibly. It could flush down to if the market doesn't give some good data that it wants. We are below the 20-day moving average, so the same thing. It's it's flushed down below that, so you're looking for pop and fades. However, kind of trapped in between the 100-day moving average and the 20-day moving average. The 100 is at 343.21, and the 20 is at 353.04. On the upside here, you got to get through that level, but you can see this upper regressional trend line that I have here. It's respecting that. So as long as we're below that, you're looking for pop and fades. If you can plow through that, you've got a 356.61 level. If it's a June low, that would be a break and retest, and it already tested that one time yesterday pre-market, and you could see how it responded on that, just right to the T. Above that, if you can push through that, 363.09 is a low from April 30th that you get some resistance, and then you have the 50-day moving average sitting at 366.12. Just take a snapshot of the levels, trade the levels. If you lose the 100-day moving average, you got a 340.19 level is that midline regressional trend line, and if you lose that, we could flush down here to this 325, 326 level, which is the lower end regressional trend line that I have drawn here. So let's get over to Amazon. Amazon's kind of chopping around here, sitting stuck in between here, the 20-day moving average 243.07 and the 50-day moving average at 251.16. It is supporting this high 245.73, so as long as you're above that, I don't mind that long right there. If you lose that, flushing down to 20 days is not unreasonable, 243.07. And then if you lose that 242.70 low, which is July 7th, you'll flush down to this 240.55 level, which is the 100-day moving average, where you could possibly get some support right there. Below that moving average here, I won't have anything until 234.35, which is the 200-day moving average, and a low from June 29th, sitting at 233.80. But it looks like it's consolidating right now, right? It's like not really making one big move or another. You know, you've got this level down here, call it a 246.63, between 246.63 and 250.30. All right, let's move on to Microsoft, and we'll do SpaceX, and we'll get over to Tesla. Microsoft here, nice movement that we had here on Monday. It was a real nice stair-stepping up all day, right? Look at that. Beautiful channel right there. Did get your resistance here at the 50-day moving average, 482, right? So that 400 is a psychological number. You're always going to get some reaction over there. So if you got to hold this 397.57 level. It's a 200-day exponential moving average that I have on here. If you lose that, could pop back down here to this 393.76, which is July 14th's high. And then if you lose that, you'll probably come here and test the lows from Monday, which is also a high at 388.95, which is July 1st high. And if you lose that, you could flush down here to this 20-day moving average at 383.82. On the upside, if you can regain this 50-day moving average at 482, I think you can come into the close from Monday, sitting, call it at 402.18. And if you can get above that, then I think we could push back into these highs at 413.05 from March 6th. Okay, SpaceX will be very quick. It's not interesting to me, but I'm covering it right now because at one point it will be pretty good. But right now, until lockup is done, it's going to be probably eating everybody's hearts out right now. So well below the 20-day moving average. And here's this low at 130.80. It's still below that right now. So it's respecting that low. Downside, it's uncharted territory for me right now. We've got a 119.62 level. You could put it on your charts right now. If you lose that level, then I think you could flush down to this 127% Fibonacci extension level that I have there, sitting at 109.39. Below that, I don't have anything charted there right now. So on the upside, though, if you can regain this 130.80 level here, you can push into the 135, which is the opening low of SpaceX existence, right? So, and then we have this point of control that was closed at 138.69 level. So I'm not trading SpaceX right now. Too loose, not enough float for the stock. So let's get over to Tesla. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. Tesla, we all have Tesla earnings today after the close. Expected high and expected movement is 7.6%. It's $28 one way or the other. So, you know, if we had a crystal ball, that'd be pretty nice. Nice movement yesterday. However, just like that we had here on Monday, I said yesterday morning, it's created a speed zone. So it created a nice little speed zone, you know, when you have a one directional sell. Well, the same thing happened yesterday, right? So we had that one directional buy, and it's creating a speed zone here. So if we are below this 337 or 377.22, could continue to flush down here. I've got a midline 5-minute opening range from yesterday. Could use that as support, and if you lose that, I think we flush and we give back the entire move yesterday, and could potentially come down to this 367.71 level. It is a May of 2025 high. So that's a break and retest, people. If we come down here, if you're patient and you think the market's going to flush, be patient for this level right here. But one thing to keep in mind, you have earnings today. So it's probably not a bad idea not to trade Tesla today, even though I'm going to see what the market, how the market opens, and see if things are going to be too whippy and too volatile in the first half hour. If they are, I may not even trade today. So, but we'll see what happens here. So, as far as the options, what I'm going to have on the board, because they have earnings today, normally since January 26th, they have expiration dates Monday, Wednesday, and Friday. But because today, being Wednesday, that they have earnings calls after today, they do not have an expiration date for today. So the next expiration date is Friday. So you do have time for your theta on your time decay. However, the IV crush, which means that they're very elevated on the pricing right now, it is going to, you're going to lose a lot of the premium pretty quickly here because of the, after the close today, once the market moves, because you're going to get a big move one way or the other. Maybe not $28. However, you're still going to get a significant move where it's going to impact the premium prices, whether you're on the calls or the puts, probably a good 35 to 50% of your premium. So you do not want to, if you are trading this, you do not want to take positions after the close when they have earnings, because that's just gambling. Nobody knows where the market is, right? So what we are going to start with, I'm going to start with the 390 calls that expire on Friday. So we can see it's $15 away from the strike price, but you can see where the premium closed at $6.90. On the put side, I'm going to have the 365 puts. I may even lower that to 360 as the market opens, and we'll see what happens. We are below the close yesterday, 378.93. So this premium price on the put, because if you buy a put, you want the market to go down, that this premium price will be elevated if we are below the close, right? So it's just like if the market opens and the market goes down and you buy a put, this premium price is going to rise. So based on these premiums here, if you're new to options, if you buy a one lot and the market, oh, look at that, little nice little spike below there. Tesla's going to be really wild today, so you got to be careful, people. You're going to have big whipsaw action. So you could just see that big wick that just came in there. So be careful on that. But getting back to this, so if the premium, let's hypothetically say that the market opens right now and it's trading at $6.90 on the premium. That means if I buy a one lot, my exposure is $690. That's it. And that's if I let it go all the way down to zero, which all the years that I've been trading options, I've never let my premium, my trade on my options go down to zero. This is just telling you what your cost basis is going to be. It doesn't mean that, okay, if I buy a one lot, that I'm going to I could potentially lose $690 if I just walked away from my computer and I didn't monitor the trade. But what we're doing here is why we're buying the premium here is because you get a bigger bang for your buck versus buying the equity, right? So you have more leverage here, and all you're trying to do is, if you think the markets are going up, and this is a basic strategy I teach, for the trade room, I teach more advanced levels when we're mentoring traders. But the basic strategy here, I've got my calls up here on the top, up left-hand corner, and I have my puts down below. So if I think the market's going down, I want to buy a put. And that means that if I buy a put and the market goes down, this premium price will rise. How much do you say? Well, I usually trade on so there's Greeks when they're involved with options, and I'll usually trade a delta of anywhere from 35 to 45 cents, meaning that for every dollar that the equity moves, this premium price will move 35 to 45 cents. So for easy math, let's hypothetically say I'm trading a delta of 50 cents. So if Tesla moves from, and I want to buy a call, if Tesla moves from 375 up to 376, doesn't matter where the premium price is. If it moves up $1 and I buy a one lot here, it's going to move up roughly 40 to 50 cents. So that means if I bought a one lot, it's equal to $50. Now, obviously, we're trading more than just a one lot, but that's just the basic concept of things. And what we trade and what we go over in the trade room is we go over the opening range breakout. And when you get your breakout, you're looking for, you're looking for points of entry and then your profit targets here. So if we make this bigger, this is, what we're looking at on my Thinkorswim platform, but we trade off of the TradingView platform because it's cleaner. You could see right here is plotted out the 5-minute opening range yesterday. And you could see when we broke it, when you broke that range, 375.70 was your range. Without even, much hesitation. You had a couple bits of, pullback here, but you could have taken that 375 and ridden it up about $10 yesterday. So what is that? How does that equate to your premium here? So if you bought, If it moved up $10, you could figure $5 on your premium. So if you bought a one lot, a simple one lot, it moved up $5 or $10, you get $5 on your premium. That's $500 for every one lot. So that's the basic gist of it. But if you come and join our trade room, we get a little more descriptive there, and then we break everything down and give you a trade book and teach you from start to finish on how to set up a trade book to day trade. Aside from that, that's going to be it for me today. So again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. And then also don't forget, go down in the description area and join our links, join our Discord community, and join our website for your free subscription for your newsletter that we put out every Sundays. If I don't see you in the trade room, I will see everybody tomorrow morning. Have a great day. Talk to you soon.